All right. Hello, John Light. Welcome.
Hello.
All right. Good evening. It's the first time we've done this at this hour. Usually we kind of do it more European evenings, North American mornings. So that's kind of nice, kind of different. Yeah. I've actually, when I started doing spaces, I wanted to do it these times, but no one ever bid on it. So it's nice to do some North American friendly time here. People finishing work. So got a lot of questions. A lot of anonymous ones. So welcome everyone. We're here with John Light. We're going to be doing the Zero Q&A part 2. All right. So John, if you could just start this, please. Start it just by defining zero in a nutshell for anyone who might be new, and also, that we could use this later.
Yeah, of course. Zero is a non-custodial borrowing protocol that's built with smart contracts on the rootstock blockchain that enables anybody who holds RBTC or is able to convert Bitcoin to RBTC to borrow Bitcoin-backed stablecoins at 0% interest. So if you have Bitcoin, you can convert it into RBTC and then use that RBTC as collateral to get a stablecoin loan at 0% interest. You just pay a flat fee. The fee is variable depending on the state of the protocol, of the Zero protocol, but it starts at 0.5%, and under certain conditions, it can even go to 0%. So generally speaking, the cost of opening and maintaining a zero loan is very low, and you can keep your zero loan open indefinitely as long as you maintain a sufficient collateral ratio. That is the ratio between the value of your collateral and the amount of stablecoins that you've borrowed. So these features, I think, are pretty nice for long-term Bitcoin holders who want to get some of the value out of their Bitcoin without actually having to sell it. I'm a zero user myself. I have friends who are zero users, and we use our loans for anything else that you would want to use a loan for, but we're just, because of this protocol, able to borrow at a much lower cost, much better terms than a traditional fiat loan, or even some of the CeFi Bitcoin-backed loans that are out there. So I think that's a pretty good introduction to what Zero is and what kind of value it's providing to people.
Brilliant. Thank you, Light. Yeah, so it's essentially hodling your Bitcoin, but selling it too, right? Unlocking that value. Love it. So yeah, I got a bunch of questions. So guys, I know a few people already put their hands up to ask questions. We're just going to do some of these that people have submitted anonymously first, and we'll get right to you. So I got one here. It says, how does ZUSD hold its peg?
That's a good question. So ZUSD is the native stablecoin that is issued by the Zero protocol. It's the stablecoin that people are actually borrowing when they open a loan using Zero. ZUSD is pegged to the dollar by design. And you can kind of think of two different ways that the peg is being held. One is, the peg prevents ZUSD from going under a dollar, and then it also prevents it from going too far above a dollar. What protects the peg from going under a dollar is that ZUSD can always be converted or redeemed for the underlying RBTC collateral at face value minus a redemption fee. And the reason why there's a redemption fee is basically to prevent people from redeeming too much ZUSD for RBTC when it's not really needed. Basically, you can take one ZUSD, and you can trade it for $1 worth of RBTC minus this redemption fee. And that kind of puts a hard floor on the value of or price of ZUSD in dollar terms. And then what prevents ZUSD from going too far above a dollar is that if the price of ZUSD is ever over $1.10, then it actually becomes profitable to open a line of credit, borrow ZUSD, and sell it for dollars, and then use those dollars to buy more Bitcoin, open another line of credit at the minimum collateral ratio, so like 100, just above 110%, borrow the maximum amount, buy Bitcoin, basically sell it for buy volume, use as collateral, get another loan, sell the loan for dollars, and basically rinse and repeat over and over again until the value of the ZUSD drops below $1.10. So there's this kind of soft peg kind of area where you can expect the price of ZUSD to float between $1 and $1.10 before these hard peg kind of mechanisms kick in. The redemption mechanism on the low end, and then the borrowing minimum collateral ratio kind of mechanism at the high end. And then there is kind of just, I think, because ZUSD is pegged to the dollar, there's also, I think, it creates a kind of shelling point for the price of ZUSD, which is kind of a technical way of saying that because it has these hard peg mechanisms and because everybody knows it's supposed to be pegged to the dollar, that might just be kind of the fair market price that it trades at. You can always borrow it. You can always redeem it for about $1 worth of Bitcoin. So it's possible that the market just sees it as, hey, it's worth $1 because of these mechanisms. We see in other stable coins that have similar mechanisms, such as LUSD, which is the native stablecoin of the Liquidity protocol that Zero is based on. It's been running for a little year now, about a year and a half. We see with its price history that it trades exactly kind of in this range, right around $1. Occasionally it goes a little bit higher than $1. Sometimes it goes a little bit below $1, but then the redemption mechanism kicks in and it gets brought back up to $1 pretty quickly. So we've seen that this protocol, these mechanisms work pretty well in practice for defending the peg.
I do have a couple of questions around what happens if the price of Bitcoin crashes, however. Can you answer that?
Yeah. So the protocol has built into it a liquidation mechanism that will liquidate the collateral of lines of credit that fall below the minimum collateral ratio, which under normal operating conditions is 110%. So for every dollar you borrow, you need to have at least $1.10 worth of Bitcoin as collateral. There's a mode of operation called recovery mode, which kicks in if the total collateral ratio of the entire system, that is the total value of all of the collateral in the system divided by the total amount of ZUSD that has been borrowed, if that goes below 150%, then the protocol kicks into recovery mode. And at that point, the minimum collateral ratio is whatever the current total collateral ratio is. So if in that situation, the total collateral ratio is 149%, then the minimum collateral ratio is also 149%, meaning that any lines of credit that have a collateral ratio of 149% or less would be eligible to be liquidated. And what happens when you get liquidated is that under normal operations, all of your Bitcoin, or the RBTC that's used as collateral, gets shifted either into the stability pool or into other lines of credit. And then ZUSD from the stability pool is used to pay off your debt. And if there's not enough ZUSD in the stability pool to pay off your debt, then your debt just gets shifted to other lines of credit along with your collateral. So this is a net neutral operation, meaning nobody is losing, no one's getting any kind of extra debt relative to their collateral, or the collateral that they're gaining. You could even make a profit doing this because your collateral gets liquidated at 109%, let's say, but your debt is 100%. So there's a 9% delta there that could be considered profit. But if the system is in recovery mode, then you only lose 110% of your collateral. If you say got liquidated at 149% collateral ratio, there's a delta of 39% between the 110% that you lose, quote unquote, and the 149% that your collateral got liquidated at. So that 39%, it just sits there in the smart contract and you can claim it. You can come back and claim it if you want to. So even though you're getting liquidated at 149% in recovery mode, you don't lose all your Bitcoin in that scenario. You only lose the 110% and then you keep the 39% that's left over. The liquidation mechanism is very efficient. Based on the current RSK block gas limit, we can fit about 40 to 50 liquidation transactions per block. Within a very short period of time, we could liquidate hundreds of lines of credit if we needed to, because the price of Bitcoin dropped so dramatically. Yeah, that's how the system with price crashes, through this really efficient liquidation mechanism. And then if the total collateral ratio of the total system drops too far, like it gets too close to being, fully or rather under collateralized, then we do have this recovery mode, which is designed to kind of incentivize people to deposit more collateral or pay off their debt, somehow increase the total health of their collateral ratio, to bring the total collateral ratio of the system back to a safer level.
All right, thanks for a thorough response there. Getting all sorts of questions on Telegram, you name it. Can't even keep up with y'all. Mike M, let me just check on here on the Sovryn Trading Dojo. He asked, please ask if USDC becomes totally captured and makes stablecoin aggregators like XUSD and such unable to use it, what would be the immediate and long-term impact on Zero and ZUSD? Question mark, question mark, question mark, question mark.
Yeah, that's a good question. Well, it's hard to say exactly. I mean, I think in some ways, decentralized, permissionless, censorship-resistant stablecoins like ZUSD benefit from that kind of scenario, because I don't know about you, but I don't like to hold money that can get frozen or blacklisted or whatever arbitrarily at the whims of some centralized company under a hostile jurisdiction. And so I think a lot of other people are going to start feeling the same way and move their money into stable coins that can't happen to. And I would say ZUSD qualifies. And that said, I don't think it's a completely positive situation for ZUSD if that were to happen, because currently a lot of people are using Babblefish as a way to get value out of Zero, because when Zero was launched on mainnet, the Babblefish community also voted to add ZUSD to the Babblefish aggregator. So people are able to deposit ZUSD into Babblefish and then withdraw any of the other stablecoins that are part of the Babblefish aggregator, including USDC. And if ZUSD or USDC blacklisted the Babblefish contract, or the bridge contract, I guess would be what they technically have to do, which would prevent people from going across the bridge with their USDC from RSK, then that would shut off one avenue through which people are currently getting liquidity from ZUSD. They could still go out through DAI or USDT or BUSD, one of the other very liquid stablecoins that Babblefish supports. It wouldn't be the end of the world, but it would be unfortunate to lose USDC as a liquidity mechanism for off-ramping to fiat or other crypto assets that people might want to buy on other chains that have USDC liquidity. So yeah, I would say it's a mixed bag, but probably mostly positive, just from a kind of adoption standpoint. Like, unfortunately, the benefits of assets like Bitcoin or its siblings like ZUSD don't always become apparent until you really need them. Like if your currency is hyperinflating or people are trying to censor your money or something like that. And of course, those are terrible events, and we hope they never come to pass, but they also tend to be good for Bitcoin. So you have to take that as a possibility.
All right, thank you. Let's do a quick rapid fire questions here. Number one, how many lines of credit are currently open?
Oh, pop quiz time. Looks like we got 138 lines of credit currently open.
And how much RBTC is currently locked as collateral in Zero?
188 RBTC, which is worth about $3.8 million.
And conversely, how much ZUSD is currently being borrowed using Zero?
2,039,048 ZUSD is currently being borrowed. That's the current ZUSD supply, and that also tells you how much is currently being borrowed. Wow, we passed the 2 million ZUSD mark. That's awesome.
Hey, and when will Zero be open to the public?
TBD, to be determined. We're currently analyzing the usage data to kind of get a sense of how people are actually using Zero. And we're also gathering kind of qualitative information through surveys and market research to identify where there are gaps, where there are needs and opportunities. And we're distilling that data into some conclusions that will guide our development to focus on a particular use case that we want to focus on for the Zero public release. The current interface, it's a really great general tool. It gives you ways to interact with the Zero Pol through all of its, functionality. But being a very general tool, it doesn't guide users toward any particular use case. It just says, we take your Bitcoin, we give you ZUSD, and then you figure out what you want to do. And I think that's great for the stage that we're at and for power users. But I think we could also build a product that has a really focused user experience on a particular use case and design a really great end-to-end experience that makes it really easy for people to, the only assumption going into the experience can be, do you have Bitcoin? And if you have Bitcoin, then we can guide you from there to actually getting value from the product in the shortest number of steps with the least amount of friction possible. And yeah, that's what we're kind of focused on right now. And once we've made some decisions there, then we buckle down, start design and development, and then however many sprints it takes to finish that later, out will come a product that we'll be excited to release to the public. But right now, we don't have a date for that.
You mentioned use cases. Several people have asked, what are people currently using Zero for?
Yeah, that's a great question. So we looked at the data on chain, and we saw that people are doing basically two main things with Zero. They are either converting ZUSD into XUSD and then using XUSD to go across the bridge with another stablecoin through the Babelfish aggregator. And then once they have this other stablecoin on this other chain, they are taking those stablecoins and they're sending them to an exchange. And based on the user interviews that we've done, it seems like most of the people who are doing that are cashing out. So they're converting the stablecoins into fiat, and then they're using that fiat to make a purchase or maybe pay off some other like higher interest debt, like a credit card or student loan or something like that. And so that's what we're calling kind of the fiat loan use case. And the other use case is leverage trading. So people are taking their ZUSD, again, converting it to XUSD, because we have so many different trading pairs that you can, or so many different assets that you can trade XUSD with on Sovryn. And they're taking that XUSD and they're going and they're buying some other asset. In about 85% of cases, they're buying more RBTC. And in some cases, they're repeating this. So they're taking the RBTC they're buying, they're going back to zero, adding that RBTC as collateral to their line of credit, borrowing more ZUSD, going, buying RBTC, wash and repeat. So getting multiple layers of leverage. But most of the leverage, it looks like it's relatively conservative. High collateral ratios, low amounts of RBTC being borrowed, but you're able to just get that much more RBTC and by proxy Bitcoin exposure through this kind of use case. So about 85% of the quote unquote leverage traders are doing that, just buying more Bitcoin. And then about 10% are buying SOV, and then the remaining 5% are buying assets that are supported by Sovryn. And those two use cases, the fiat loan use case and the leverage trading use case, are actually about evenly split. It's, I think, like 55% are fiat borrowers and 45% are leverage traders. When you look at those two combined, there are a couple of other use cases like the stability pool. There's been about 100,000 USD in the stability pool, and then some people are taking XUSD and they're putting it into the lending pool. So they're taking their ZUSD, converting it to XUSD, and then putting it into the XUSD lending pool. That's about 5% of the total ZUSD that's been borrowed is in the lending pool. But it's, again, it's a that and the stability pool are very small compared to these fiat loan and leverage trading use cases. Those two use cases make up about, I think, 85 or 90% of the usage of Zero today.
Right on. Lots of questions here, so I'm just going to whip through them here. Here's one anonymously. It said, can an order to add collateral be established if a certain Bitcoin price is reached, similar to a margin limit order where Bitcoin is locked into a smart contract that executes the order when the price is reached? Couldn't a smart contract be created that locks Bitcoin to add collateral at zero to a LOC when a certain price is reached?
Yeah, I mean, theoretically, you could have basically a smart contract that you, as the owner of the Bitcoin, are allowed to freely, transfer the Bitcoin that's held in that smart contract whenever you want to wherever you want. Basically, treat it like a smart contract wallet. But then some designated third party could also move that Bitcoin, the whole amount, but they could only do one thing with it, which is to add it as collateral to your line of credit. You could basically then sign up for this, some third-party service that says, we will watch the price of Bitcoin, and if the price of Bitcoin drops too low, we will trigger an RSK transaction to your smart wallet that will move the RBTC that's held in the smart wallet into your line of credit, smart contract to basically top off your collateral. That is totally technically possible. Yes.
DJ on Philly from the Sovryn Trading Dojo Telegram group. Question for Light. Can Zero show history for stability pool deposits / withdrawals? There was a liquidation recently that changed my balances, and I would love to be able to see those transactions.
Yeah, it is definitely technically possible for a history to be shown. It's something that we plan to do for the public release, regardless of what use case we end up focusing on. And it might one day be added to the current, Zero interface, but it's currently not on the roadmap. We're focused on the public release version right now.
Do you foresee running into any challenges as Zero adoption increases?
Yeah. I'll have to think about that one for a second. One of the challenges with any kind of stablecoin protocol is that it's it's you have a supply and demand problem. First, you have to figure out where's the supply going to come from. Like how does the stablecoin get out into the market to begin with? And then you have to figure out where does demand come from? Because if there's more supply than demand, the price goes down. This is basic, economics 101. So you need to kind of have a balance of supply and demand constantly. As demand grows, you need to increase supply. As supply grows, you need to increase demand. Otherwise, you start running into these mechanisms that the protocol has designed to hold the peg. Basically, if the supply grows too quickly or outpaces demand, then the value of the USD could start to slip below $1, which will cause redemptions to occur. Basically, people will get forced partial or even full liquidation, even if they have a healthy collateral ratio, because that's how the redemption mechanism works. And then on the other side, if demand outstrips supply, then the price of ZUSD could go much higher than $1. Either, until the market naturally says, why are we paying $1.20 for a dollar peg stablecoin? Or you start running into that, kind of hard peg mechanism at around $1.10, where people start just opening up lines of credit, generating a bunch of ZUSD and dumping it on the market, which is probably the best thing that could happen. Like, I think that's way better. It would be way better if that happened than if a lot of people were getting redeemed against because the price was too low. It's kind of a good problem to have. But still, the supply is not, the supply of collateral, the supply of ZUSD, it's not infinite. So, it would be unfortunate to essentially artificially cap demand because there's not enough ZUSD supply. You basically run into an artificial growth limit. So there's this constant balance that has to be taken care of to ensure that as the protocol grows, you have sources of demand for ZUSD. And also, as demand for Bitcoin-backed, censorship-resistant stablecoins grows, that we also have enough Bitcoin holders who want to become ZUSD line of credit holders and issue ZUSD to service that demand for ZUSD and put that ZUSD out into the market. So yeah, I think those are important challenges to keep in mind, and something that I think is going to be really great to get the community's help with is thinking of ways to increase both sides of the supply and demand equation. How are we going to get more and more people borrowing ZUSD and putting ZUSD out into the market? And then also, how are we going to generate demand for basically holding ZUSD and saving in ZUSD as a kind of component of an overall savings portfolio? Of course, everybody loves to save and HODL Bitcoin, but it's also good to save and HODL at least some, cash, so that you can, buy the dip. So wouldn't it be great if people, instead of holding that cash as dollars or treasuries or something like that in a centralized institution or bank account, what if they held that as Bitcoin-backed stablecoins in their own wallet? I think that would be a really great trend to see. And it's something that, the devs and entrepreneurs out there in the community can start thinking about if they're interested in seeing Zero grow.
Remember, guys, if you want to ask questions, just request to be a speaker. I'm still getting lots of questions anonymously. I think I can tell people don't want to be put on the spot live. But yeah, so I'll continue with the anonymous questions. Okay, so I have one that says, is there some sort of automation coming that can automatically transfer RBTC liquidation rewards to XUSD to ZUSD to add again to stability pool?
There's nothing like that currently being planned, but if we see that that's a use case, or that shows a lot of high potential for adding value or generating value for the Zero protocol, it could become part of the core team's roadmap. I also want to emphasize, like, Zero is an open protocol. So if there are any entrepreneurs out there who are looking for opportunities, you can hear from the questions on this call, the Zero protocol, it's opening a lot of opportunities for building new services on top of this protocol to service Zero users. And like, the Sovryn core team can't do everything, and we don't want to do everything. Ideally we would just be focusing on protocol development, making Zero and the Zero development tools the best they can be, and then we have this huge, growing ecosystem of businesses and new protocols that get built on top of Zero. I think that would be the best, most sustainable way for Zero to grow. But yeah, I think it's a great idea. It's just it's one of many things that we could be working on. So we'll have to consider that, weigh it against the other options, and see what comes out on top.
I would like to be able to swap from ZUSD to DOC or SOV or SOV in addition to XUSD, saving me a swap.
Yeah, so it sounds like they want maybe like a direct trading pair between ZUSD and these other assets. We don't have plans for that on the Sovryn core team. But again, I think this is an area where, if an entrepreneur out there sees an opportunity, or even just somebody who, has some basic technical skills and wants to create an AMM pool using the Sovryn protocol, you can actually create an AMM pool for the assets that you want to trade directly against Zero. It's just not something that the Sovryn core team is focusing on, because I don't know if the person who asked this question is aware, but the long-term vision, even short-term vision, it's something that's going to be happening and coming out with the public release of Zero. What we want to do is we want to integrate Zero with the Sovryn Mint protocol. And Mint is a protocol that's under development that is very similar to Babelfish in that it aggregates stablecoins into a single aggregated stablecoin. In the case of Babelfish, it aggregates like ZUSD, DAI, USDC, and a bunch of these various different types of stablecoins with different types of collateral backing them into a single stablecoin called XUSD. And with the Sovryn Mint protocol, what we're going to do is we're going to aggregate exclusively Bitcoin-backed stablecoins. So right now, the first two stablecoins that we're looking at are ZUSD, of course, and also DOC, Dollar on Chain, which is the first stablecoin of the Money on Chain protocol. It's also backed by Bitcoin. So the Sovryn Mint protocol, it will aggregate these stablecoins, Bitcoin-backed stablecoins, into one kind of meta stablecoin that's exclusively backed by Bitcoin-backed stablecoins, and that meta stablecoin will be called Sovryn Dollar. And so the Sovryn Dollar is intended to become the kind of primary stablecoin of the Sovryn ecosystem, and that stablecoin will be traded against other stablecoins, or not other stablecoins, but other assets in the Sovryn ecosystem. We haven't kind of fully, finalized the plans about which assets the Sovryn Dollar will trade against, or when those trading pairs will become available. But that's kind of the high-level plan. And so most likely, again, this is just from the core team's like plans perspectives. Sovryn is a permissionless protocol. Anybody can do whatever they want, open any trading pairs they want. But from our own planning perspective, we're not planning to do any direct pairs with ZUSD. Instead, we want to focus on the sovereign dollar and kind of treat the sovereign dollar as the de facto kind of dollar-based asset in the sovereign ecosystem.
All right, guys. I have a few more questions here. What do you think about creating a commemorative NFT for zero beta users, like the ones created in Genesis?
I think it's an interesting idea. Yeah, we'll have to run that by the adoption team. Certainly wouldn't rule it out. Why not?
Oh, Jay, I think you're alive if you want to ask your question.
Excellent. Thanks. This is great. Great AMA Q&A. By the way, just can you clarify the role of the zero token and the mint token as it relates to the whole process of ZUSD and SOV and governance?
So there is no zero token. There was originally a proposal for there to be one. But as the market, I think, deteriorated towards the end of last year and beginning of this year, I think the appetite for having another asset in the sovereign ecosystem was kind of dried up. And also just from a kind of perspective, I think the sovereign development team was spread pretty thin. So, launching another asset would have just been one more thing to add to the list of priorities that folks had around that time. So there was a plan to do a zero native token, but that plan kind of got shelved. And the sovereign mint token plays a very similar role to SOV in the sovereign ecosystem, in that it's a governance token. But in the case of the mint token, the initial role of the mint token is governing the mint treasury, which consists of SOV and mint from the Bootstrap event, which occurred last year. And beyond that, I don't have much to say about the mint asset right now.
Any other questions, Jay?
No, I'm good. Thank you.
Cool. Cheers. Thanks for your question. Appreciate you. John, just a couple more questions and we'll wrap up. Can you imagine any extra service of value in Zero that would allow a live line of credit to generate revenue for the soft stakers in addition to the existing fees for creating or canceling it?
As a point of clarification, borrowing fees are only generated at the time that ZUSD is minted or borrowed. There's no fee for closing a line of credit or partially repaying a line of credit. But yeah, in terms of value-added services, I mean, we heard a couple of examples that people were giving in their questions on this call today. So like one service that people mentioned was the ability to automatically top off loans or collateral rather. Another was the ability to automatically, I think it was, withdraw RBTC that gets sent to the stability pool from liquidations, liquidating that, buying more ZUSD and putting that back into the stability pool, or something like that. I'll have to listen to the recording to get exactly what that was. But and then, kind of looking at the use cases that people are using it for. Like I said, some people are using it for loans, so like personal loans. And you could imagine businesses getting built specifically for specific types of loans. Like use your Bitcoin to get a mortgage. Use your Bitcoin to get a car loan. Use your Bitcoin to refinance your student debt or refinance your credit cards. Like you could have businesses that specialize in these types of loans. just from like a marketing perspective, right? You want to focus on a particular target market. And, their pitch could be like, use your Bitcoin to get a loan at 0% interest and pay off your high interest debt. Or, as an alternative to high interest consumer finance, consumer credit. Used, it could be pitched to Bitcoin businesses to say like, hey, you've got Bitcoin on your balance sheet because you're a Bitcoin business. Well, you don't have to sell it to pay your expenses. You could borrow against it at 0% interest. So now you've got capital to pay your bills, invest in growth, whatever it is that you would have sold your Bitcoin for. Now you can do that without having to sell your necessarily to sell your Bitcoin as 0% interest. So yeah, there's a bunch of, I think, different like finance or like things, kind of business models that you could get into. There could be different, same thing, but for the leverage trading use case, you could have different businesses that build different interfaces that focus on leverage trading for different types of assets. You could have leverage trading that's focused just on Bitcoin. You could have leverage trading that's focused on Bitcoin and a small range of other crypto assets, or Bitcoin and a wide range of other crypto assets, or even, all kinds of different assets, including, stocks, bonds, Forex, etc. Basically using your Bitcoin as collateral to leverage, have leverage investments in all of these different other types of assets. I think there's a lot of room for innovation and competition in that space. So yeah, lots of opportunities. I think it just requires creative and driven entrepreneurs to come in, see the opportunity, and make it happen. Yep.
There we go. And then finally, where is the best place for me to learn more about Zero?
Yeah. So we have some articles written in the Sovryn wiki, wiki.sovryn.app. Search for Zero in the search bar, and you should see a couple of articles come up. We also have some posts on the Sovryn blog, sovryn.app/blog, about Zero. So if you go back through the history, you should see a few posts about Zero that are really helpful. And then for developers and other more technically inclined individuals, if you want to learn more about Zero, there's a bunch of documentation in the Zero GitHub repo. So you go to github.com/distributedcollective/Zero and find the documentation in the README, and also, dig through the repo, check out the code, check out the SDK, and learn more about Zero by seeing exactly how it works.
All right, we're wrapping it up right about on the hour mark. Thank you, John Light, very much. Thank you to all our listeners for joining us. You make sure, if you guys want to keep up with him, @Litecoin is his Twitter handle. Also follow us if you don't already @SovrynBTC. Shout out to all the Sovryns here, Art of Tomas, Travis Trades. We see you. We love your content. We appreciate you. We'll be posting this on YouTube and all the other streaming platforms on Monday or Tuesday. So thanks very much, guys. Stay sovereign.
Yep. Thanks for the question, y'all. Stay sovereign.